All right, markets just closed with a lot to unpack on Monday. SPY and triple Qs are resting on critical technical levels that could dictate the rest of the week. We got inflation data, earnings, and volatility swings that are lined up for a packed schedule and fast moves. I'm gonna break down some key levels. I'm gonna look at how sectors are flowing, talk about some option strategies, and just look at this week's market game plan. So stick with me, I'll cut through the noise and deliver the actual signals that matter for your next trade. Just a quick update on the government shutdown. The Senate just passed the funding bill to end the shutdown. It now moves to the House and the President. So the market's feeling some relief, but key data like CPI and jobless claims remain delayed or on hold because of the shutdown. That adds uncertainty and fuels volatility around Thursday's inflation report, since the numbers might be incomplete or might get revised later, like always. So even as stocks rallied Monday on hopes for an end of the shutdown, traders need to be ready for fluctuations caused by this shutdown. So we're not getting any data basically. Option premiums might stay elevated, price swings could surprise us like yesterday, and watching Fed signals and earnings will be critical while waiting for government data to catch up. Now I'm gonna get into my technical setup. Monday's close is the foundation for the rest of the week. So we have SPY closed at 681 above the 20, 50, and 200 day moving averages. This is kind of sets the support zone from 679 to the 681 area. So if SPY can push above 684, I might see momentum towards 690 or even 695 if CPI and earnings cooperate. Under 679, I'm gonna expect sellers to reassert control like yesterday and test lower support at 672. For the triple Qs, it closed at 623, also above its main moving averages. I'm gonna watch the 623 to 625 levels as a key pivot. Closing above fuels a run towards resistance at 629 to 633. If triple Q slip below 621 and break with speed, tech could weaken and feed into sector rotation. And IWM ended the day at 244. If it holds above 244, that's really important, but bulls want confirmation with a push over 245, I believe. Looking ahead, here's what's shaping the week. We got CPI on Thursday. That takes center stage. But with the shutdown delay, I expect uncertainty and volatility. The 10-year yield at 4.10% remains a key metric, because rising yields usually pressure tech and growth stocks. Also watch earnings from tech heavyweights including Cisco, Disney, and Applied Materials. Good beats and good guidance could ignite a risk-on rally again. Obviously, weak guides could pull stocks lower across multiple sectors. My first trade was gonna be if SPY basically holds 682 with solid volume. I'm gonna consider calls targeting 690 and above. My next trade will be triple Qs above 625 on volume and momentum to 633. Also calls depending on my risk tolerance in that moment. And my third trade is gonna be if VIX spikes above 19 or CPI disappoints, I'm gonna flip to puts and target SPY down to 679 and maybe even all the way down to 672. For triple Qs, I'm gonna have it at 621. Also, sector rotation remains really important because tech and communication services are leading while defensive sector now is lagging. I'm going to talk about sizing usually, but I really don't have any idea how I'm going to size this, but I'm not going to go over 2% of my account size. We'll see what happens. So these strategies obviously need deeper dive into option Greeks. You can drop your tickers and setups in the comments if there's something you don't understand. I'm here to break it down for you. Remember to hit like if you're finding these weekly game plans useful, and subscribe so you never miss a critical setup. So this is my roadmap for the week. Stay nimble, manage risks tightly, and don't be afraid to step aside if price action doesn't cooperate. Trade safe, trade smart. See you next time with fresh insights and setups.